pray you give me strength to carry on. 'Cause I know what it means to see my pension rise only in my dreams. So here my pension goes down on its own, going down the only road it's ever known, like a boat anchor born to sink on its own. And I've made up my mind. It's time to get out of that turd and into something tangible. Another day, another horrible parody by JSnip4 to let you know about the stinking, rotting pension system. Here we go again for the millionth different video about pensions in the USA. Notice my videos are only focused about the USA when it comes to these pensions, for the most part. Quick look surprised. Largest U.S. pension fund suffers worst annual return since financial crisis due to heavy stock losses. You know what's amazing about that? How the hell can Dow break records, S&P break records, the overall stock market break records, new record high, all-time highs, green shoots, but pension funds are losing out the wazoo? Zero Hedge. While we have often documented the dramatic underperformance by the hedge fund industry over the past decade, courtesy of a centrally planned market in which it no longer pays to hedge, culminating with countless hedge fund closures and substantial redemptions, mostly by now redundant fund of funds managers. Today we learned that vanilla asset managers were also hurt over the past year in which the S&P went nowhere. And not just in Japan, where the gargantuan 1.4 trillion GPIF recently suffered major losses, but in the U.S. as well. Case in point, CALPERS, the largest U.S. public pension fund, which, as the Wall Street Journal reports, posted its lowest annual gain since the last financial crisis due to heavy losses in stocks, they said. The California Public Employees Retirement System, or CALPERS as they call it, said it earned just 0.6% on its investments for the fiscal year ended June 30th, according to a Monday news release, barely turning a profit for the full year. The last time CalPERS lost money was during the fiscal year 2009, when the fund's holdings fell 24.8%. It was the second straight year CalPERS failed to hit its internal investment target of 7.5%. In 2015, CalPERS earned only 2.4%, which suggests that as a result of the dramatic two-year underperformance relative to the fund's own internal target returns, public pensions in California are not only significantly underfunded as of this moment, they're getting worse. CalPERS oversees retirement benefits for 1.7 million public sector workers. As the Wall Street Journal notes, workers or local governments often must contribute more when pension funds fail to generate expected returns. The problem is when either workers or non-local governments can or want to contribute more. Unlike scores of underperforming hedge funds, whose primary investors are already wealthy individuals who can weather a down year, or more in the case of Pershing Square, CalPERS' annual results are watched closely in the investment world. It is considered a bellwether for U.S. public pensions because of its size and investment approach. Many pensions currently are struggling because of a sustained period of low interest rates. This is a challenging time to invest, Ted Iliopoulos, CalPERS chief investment officer, said in the release, which is odd because one look at the ticker shows the S&P trading at all-time highs, as I talked about a minute ago. This is a challenging time. I just read that. The giant California plan ended 2016 with roughly $295 billion in assets, and more than half of those funds are invested with publicly traded stocks. Those investments declined 3.4% through the performance beat internal targets. Fixed income produced the largest returns at 9.3%, though the results underperformed CalPERS benchmark. The California retirement giant's private equity portfolio posted returns of just 1.7%. Hold on. Real estate holdings returned 7.1%, but that was below CalPERS' internal target by more than 5.6 percentage points. And Mr. CalPERS Fund, Jason at 4 has news for you. If you think that was bad, wait till we now go year after year. After 2016, just keep watching 2017, 2018, 2019, and let's just see what happens with real estate. Because I got a sneaky suspicion going to get far worse. I've already done the videos recently. Big high-end real estate over in the UK. Big buildings, multi, hundreds of millions of dollars, tens of millions of dollars. We're selling that one off. We're going to sell it now. And it's just going to keep continuing to happen. Sell after sell after sell after sell. It says, so which brings us to a post from 2 weeks ago, namely Bank of America's take why bond yields are set to hit record lows after the current hiccup. It has to do with pension fund capital, reallocation, and disenfranchisement with the equity asset class, which absent PE multiples soaring to 30 times or more, will hardly generate substantial returns from this moment on. As Bank of America wrote, treasuries make up nearly 50% of the positive yielding DM sovereign bonds. Curves are 100 basis points flatter, and there is a greater likelihood that 10-year yields probably won't go back to even 2.5%. We would expect a bigger capitulation by pension managers in the coming months and years, end quote. Ironically, if more of CalPERS' assets were invested in treasuries, it would have an absolutely stellar return, courtesy of a record year-to-date profit generated by longer maturity bonds, especially the 10-year and 30-year, as everyone rushes to capture whatever yields they can. So let's think about that. How much did they have? $295 billion in assets. A lot of that is in the quote-unquote market, as in stocks and whatnot. So if they decided, well, treasuries would have actually done pretty well in the time period we're looking at, let's take the $295 billion and put it over there. What would happen to the stock market? You'd have to have you'd see the most massive sell order taking place. Oh, markets can't rally on that. Markets go down. So CalPERS, we love you, but you can't do that. We need you to stay put and just do what you've always done. And by God, I bet they will. Until the day comes when the government takes over everything and says, oh, by the way, we've taken this fund and moved it over into safe investments, government bonds for you before the market crash. Or while the market was crashing, we got out in the nick of time. You did take some losses, but we're now in the safe haven treasury bonds. Remember the MIRA. I've talked about this before, the MIRA, My IRA. Obama has created a new trademark MIRA account, so, why did they do that? Again, they always do everything way in advance so that when the times come, it's already, we already got these MIRA accounts you can put your money right into. It's real easy. Just call your broker or whoever your HR department is, tell them to switch over to this. It's already there. And you will then be funding the government, debt ceiling, debt, borrowing, etc. Not China anymore. Not Japan anymore, because they used to be first and second. Now the Federal Reserve has been number one. And let's not forget about those days of 80 billion months, I should say. Every month, the Fed was buying back $80 billion in this mortgage-backed nonsense, garbage securities. Which is why their balance sheet is $4.5 or so trillion and not looking like they can do anything with it. It's a heaping, stinking pile of garbage that they quote as assets. We gave 100% on the dollar value. It's no different than a baby's diaper full of crap. I'm talking a wet one, the one that makes you gag when you change it. But that's what we are in this country. This is what we've become. Rig everything. Don't let anyone change anything. Just keep the music playing. Keep the people dancing. No one, don't get out of line. CalPERS, just keep investing the way you have been. We don't want to make any sudden movements. We need all these people to have this faith in the market, because if they lose faith in the market, it could be devastating. But if that happens, we do have this thing called a Myra account. It's already ready for you. So we will see where this CALPERS pension fund actually ends up this year, end of this year, next year. I'd be really interested to see how this goes for all pension funds, for that matter. Take care.